All right, we are live.
We probably are, yes.
Morning, boys.
Morning, George.
Good morning, George.
It's always hard to tell on this, whether you're live or not, but we'll just presume we're live right now. Dude, what's the bid? I think episode 5, so we've shown up 5 weeks in a row.
And you said it wouldn't last. Who said it wouldn't last, huh?
Who said you wouldn't last? One of those lessons that we all learned. You just show up and you do it, and good things will happen. So I'm Kevin Hill with Brush Pass Research. I got Casey Larkin, as always, with Farelanes. We're going to talk about rates and bids, and we have a very special guest here, our former colleague and boss and former president of FreightWaves. It seems like every show we have someone that was at FreightWaves on it, but Mr. George Abernathy, he's semi-retired now, sits on a board of a number of different tech companies like Highway and Merge, does some work for Venture 53. So we're going to talk about the market and rates and just transportation in general. Thanks for joining us, George.
It's my pleasure, Hill and Casey. The amount of knowledge that is still at FreightWaves and the folks who have gone on to other, sometimes bigger, better things is remarkable. So I'm pleased to be in that line of former or current FreightWavers.
It is good, like the kind of the network that is spreading out there right now is pretty cool. It's neat to see it and be a part of it.
It's one of those things that, there's a whole lot more salt up here than pepper. But generationally, you look at where were the companies that had the significant influence in our industry, go back the Schneiders of the world.
Mm-hmm.
There's so many people that, albeit the Venture 53 conference on Monday, and Chris Lofgren, the former CEO of Schneider, will be on a panel with me. And you think about the companies that had those influences, and Hunt certainly has had it. And you see what, the Silver and Coyote folks. But the FreightWaves world will be one of those that you'll see people for multiple decades that are influencing the different companies that they will have gone to work with. So I'm proud of the time that we all spent over there.
Yeah, you're exactly right. It's that network's going to spread out over the next decade, and it's going to be cool to see, be a part of, and we'll always have the war stories about, especially you guys were really in the early days. I was pretty well, kind of in the early days as well when it was the Wild West, certainly, and so some really good times.
Absolutely. The Wild West, with all the, examples of how the West was won, and, being next to chicken plants, and just a variety of stories that are probably best left unsaid. So, but it was great. I mean, Craig Fuller is a genius in our industry, has, extraordinary ideas. And, as you guys are doing this, I love the concept of what you're doing here. As you think about the visibility that we get, what's going on with bidding, what's going on in the world of rates and all that, it was relatively early in 2022 when Craig said there was going to be a crash, there was going to be this transportation impact, and lo and behold, he was right. A transportation recession, etc. Yeah. He was right, and he knew before because he saw what the data was telling him, and it's a cautionary tale that one will, be harmed if they don't pay attention what freight data tells you is going to be occurring.
Yeah, and it seems like you still get a little bit of flack on those market calls, but over the last, certainly since 2019, he's been right with the sonar data. He really has, over and over again, right? Coming up with ocean imports, that influx back to 2019, you can just see it in the data, and it's a precursor of what's going to happen. Unfortunately, we're 26th, 27th month of this freight recession, which is maybe not as hard and as deep as it was back in 2008, 2009, but extended. long and slow grind that you know, a lot of people try to you know, predict when we might come out of it, and I don't know when we will. But it's been a long, slow depression, it seems like, in the freight markets.
You know, I think that, and as you think about that circumstance, and I always get black swan and white swans mixed up, but COVID being that impactor that it had, and everybody's always going to say, well, history repeats itself. Those who forget the past are doomed to repeat it. All that, but I had not seen that type of circumstance in the transportation network, the supply and demand of what COVID did, and the what we didn't know, I mean, right away was there's going to be, this initial crash, but then all the surge of things, we're all staying at home and being consumers of things and those things. So suddenly we have a huge surge of all of this demand, and more capacity comes in because, even I could run a trucking company when the spot rates are $4.50 a mile. Yes. And you have all this capacity flowing in, and then, well, the expected occurrence of that demand will ebb, if not deplete, but ebb, because inventory levels go so high, etc. And that's where the data said at the beginning of 2022, we have, as Craig said, we're staring down the barrel of a freight recession. But we still had all of this capacity that entered the market when spot rates were so high, and anybody, including me, could have run a trucking company that could make money at $4.50 a mile. I can't run a trucking company. I don't think anybody can run a trucking company at $1.80 or $2 a spot rate mile and make money. Right. And that's where that's where the challenge in the, when is it going to ebb? It's going to ebb when enough of that capacity does come out of the market. And I think you're starting to see signs that in certain pockets and regions that it's occurring. There's certainly not an overall, but I'm still a diligent consumer of the data by Freightways, at Emerge, we buy from Freightways, we buy from DAT, and as you consume that, you see these pockets where things are occurring, and I think the overall end is in sight. The consumer seems to still have some level of strength, but are we in for is the Fed going to get that soft landing that they're hoping for, or will there be some amount of pain? And that pain, I think, for transportation could be an extension if the consumer doesn't pull us out. I think the consumer is going to pull us out. I really do. I think that if not a normal second half of the year, I think you'll see more of a normality, returning for the second half.
Yeah, for sure. And I mean, you mentioned the calls that Freightways, Craig was able to make with the sonar data back in the day. A lot of that, right, is like using container volumes, ocean volumes, as a leading indicator. Yep. I think one of the things that I've seen recently is it seems like those bookings, right, those rates for ocean spot are going up, and the volumes will probably be following. I see guys like Tom Albrecht. I think I saw a quote of his yesterday, preparing for an increase, right, or a positive market. But no, it is interesting to look at all of that stuff and figure out kind of where the market's going. I'd be interested, G, do you know like what pockets of the domestic freight markets are heating up, or where you're kind of hearing folks are excited? It's cool to see, right, the sentiment, anecdotes, people kind of posting positive vibes on the floor, but it'd be cool to get your perspective on that.
Well, I think that seasonality actually is working a little bit of its magic. That expectation of, is the Southeast going to have a real, genuine produce type season. I hark back, Casey, to my time at Transplace, and one of the things that we got really good at was being able to secure that capacity and have there be mechanisms that would flex and flux if necessary for a region in the Southeast. You couldn't say to a managed trans customer that, oops, I got surprised because there's a produce season, right? The Farmer's Almanac will tell you there's going to be a produce season every year unless there are some sort of outlandish circumstances like COVID or otherwise. So to me, I think you're seeing some of that refrigerated capacity swing over to refrigerated freight, which then pulls in more of the dry van capacity to handle some of that freight that the refrigerated was. And I think that Southeast area is one of the areas that you're seeing some of this. It's not, grand tightening, but you're seeing tender rejections move up. I think you're seeing rates start to move a little bit.
For sure.
I think, I think a return of seasonality is a big key to the health of the market, and one of the precursors, right? 2 years now, or even before that, even in the bull market, right? You didn't really have the seasonality. So the typical seasonality that we always see has not been around for 3 or 4 years now, which is kind of strange. So seeing that seasonality come through is important, and a rebound in the market could get us back to normal. Maybe a little bit tighter than normal, just a smidge though.
Exactly.
I don't think we're going to see any kind of crazy turn like we did in 2018. 2017 going into 2018, or certainly the pandemic, because one of the questions I always ask is, without COVID, how would we get out of the 2019 slump? Because that continued in 2020, and it was going to continue until COVID happened and the shutdown. I remember on a Tuesday we had less load volumes in OTVI than we had on a normal Christmas day.
Right.
But it was like 1 or 2 days that there were even less volume. I mean, we hit this crash in April of 2020. And then by June, July, we were on the violent upswing to the upside, right? Upswing to upside. So we're not going to see that again. How do we get out of this? It's tricky to answer.
I think that obviously with what you guys are doing in research, and Casey, what companies like Farelanes are doing, and I'll talk about where I do sit on the board at Emerge still. What we're seeing where the Emerge model is working as that procurement engine. I've said that, I've been chasing optimality in freight procurement for multiple decades now. I go back to the first optimization-based procurement platform in OptiBid with Tom Sanderson, Yossi Sheffy, Chris Kaplis, and the team that was PTCG that then turned into Sabre, and that still exists today in Manhattan. But at Emerge, if you saw, and Emerge was a picture of what the overall economy was doing, you would say we're in a boom. And the reason is the volumes that are being procured through and then leveraging and utilizing capacity that Emerge will give you access to, very different than in traditional brokerage, very different than any sort of traditional, it's amazing to say traditional digital broker either, because that is capacity that's being secured under contract. And I know we can all go off on that there's no real legal binding behind contract, but if we're going to accept contract versus spot, the willingness for shippers to be prepared for when that swing will come by utilizing capacity in that Emerge offering, Emerge type marketplace, is significant. The volumes would make you think under the contract areas that things are really booming. You look over on the spot, though, you do see that it's still not, shown moving. And that's where I look to see, I see shipper behavior taking advantage of many of the things that an emerge like product can do. It can get me different, types of capacity that I want to lean on a long-term basis rather than simply playing the market, understanding that in the contract way I'm doing that, I'm getting good rates, I'm getting great service, and I'm not missing out on a ton of rate type of opportunity out in the spot market. It's been a lot of talk about doing that. That type of offering is working, and I think that what we'll see then is if that capacity from on the supply side moves into handling that kind of freight, we'll see that the other capacity out there, the other supply, is going to be at the mercy of the spot market. And even right now, I wouldn't want to be at the mercy of the spot market. It's great to be at the mercy of the spot market when it's $4.50 a mile, but it's very, very hard to run that long term. And I think it's really interesting, and I'll stop on saying this. It's really interesting. So many of the providers out there who are doing well. There's a as long as you're armed, the number of providers, whether they be asset or non-asset, in the publicly traded community, they're not having particularly happy times talking to Wall Street or talking to the investment community. There are many, though, that are. There's a lot of publicly traded companies that have diversified themselves. The diversification of the Hunts and the NFIs and the Covenants and the others to get away from the traditional over the road and being, even if they have a lot of contract, being still so exposed to the spot market. Those who've moved away from that and have diversified into dedicated, into intermodal, into owning their own warehousing space, those are the companies that are thriving and are distancing themselves from the unpredictability of the spot market. It's great to run freight at $4.50 a mile and just cash those big checks, but the market does turn. And to your point, Kevin, it's been a long-standing freight recession that is tough for us to find where the bounce is going to be.
It definitely is. Casey, what are we looking at here?
We are looking at May numbers versus April numbers. We've got average line haul for all equipment types, and then averaged out in the totals here at the bottom, average length of haul, rate per mile, and then how those things have changed month over month. I guess it is nice to see, right? Dry van up 250, 260 basis points to like 210 a mile, flatbed up as well, reefer up close to 10 cents. So seems like the value of the truck is increasing. It's a little too early to look at the volume numbers, but even at 210, right? With our conversation with Ed Burns last week, even these companies that do have the contracts, the contract rates are lower. A lot of them are operating at a loss, right? And how much longer can they afford to run lanes at these rates? Conversely, though, the other thing that just popped into the top of my head was I was having a conversation with Chris Torrance last week over at Optum, and they talked to a lot of trucking companies, and whether it's Wendy's trying to use dynamic pricing for their burgers, or these large trucking fleets. I think a lot of them are thinking about, right, if you have the dedicated lane, you have the contract lane, how do you utilize that truck coming back out? Is there a way to run some freight on the spot market so you don't have to deadhead? I don't know, George, maybe that's part of the diversification piece, right? You got to have the core customers know where you're doing well, and then figure out how to make money with your assets as many hours a day as possible.
Yeah, so it's so much, Casey, about predictability, whether I am publicly traded or privately held. But if I'm publicly traded and I got every quarter, I've got to go out there and face the music. What does the street want? They want predictability, right? Hell, if you go back to the beginnings we were talking before we went live about the beginnings of freight waves, the genius of thinking about a freight future,
right?
It was intended to reduce and or eliminate that volatility so that I would have predictability. That's what is being sought by so many of the shippers out there, and so many of the carriers they're turning towards that. So I think that I don't want to simply do an emerge commercial, but I think that's why there is more momentum from both the supply and the demand side of working together. I mean, it's always been the opponents of shippers and carriers or intermediaries in the middle. We're not all trying to achieve the same thing. I think we are seeing more of that, and it's not just lip service, right? We've been to conferences for years and years and years where people say, we just need to have people work better together, et cetera, et cetera. And there's going to be or has been this rush to try to take advantage when you're a shipper if the spot market is going lower and move your freight that way, or conversely, if the market's going to $4 a mile, carriers chasing after that. I think there's a lot more level-headedness out there now, and trying to, whether I'm running a carrier or running an asset or non-asset company, or on the shipper side, trying to bring predictability so that if I'm I'm a shipper running $500 million worth of freight, and I've told my company that in this fiscal year I'm going to deliver all of those items for within that $500 million budget, that person will get some level of praise if they deliver it for $499 million, but they're going to catch a lot more grief if they deliver it for 501. It's a lot worse. All we're looking for is, or what they're looking for is, that predictability. And that's why I see the companies that have diversified and are really doing more. If you think about it, what's the next natural extension from contract freight? Well, dedicated, right? I mean, that's really, contract. And there's genuinely some level of legalities and true contracts behind those dedicated lanes, all the way then to having your private fleets and the like. So to me, that's this natural progression that is occurring, and the companies that have gone into that heavily have done well, along with the future of so many things, whether they be moving things more efficiently, like really are going to be in intermodal. The efficiencies are there. They were there, 20, 30 years ago when Hunt and the BN were coming together to do these things. They're still there. That's why it's, in my opinion, such a brilliant move for JB Hunt to be such a remarkably large provider in that realm, from an efficiency standpoint, and also versus trying to find that many drivers to move all this freight. So anyway, bottom line, I think both sides are playing nicer together and are using the right kinds of technologies to do that. And I think that that's where the companies that are fostering that are thriving, and the companies that were fostering more of the aggressiveness of the spot market and all that aren't.
Is a really good point. Predictability, especially on the shipper side, right? We kind of sometimes get in tunnel vision on transportation, but it's really the shippers who need the predictability.
Yep.
We had Seth on here, Seth Holm, right?
Yep.
Last week, and you don't have to talk to Seth for very long. Runs a hedge fund now, was with us at Freight Waves, and he is one of those investors that want predictability out of investments, right? And if you look at shippers, right, delivering that budget is the most important thing. Most important thing. Saving a little bit, you get a little bit of praise. You go over that, you get fired.
Exactly.
If you're the transportation
Exactly
manager, right? Or if you're the VP of logistics or chief logistics officer, you get fired. You get fired if it delivers over, because that goes to your gross margin, to your operating margin, and that's when the CEO, the CFO have to answer very difficult questions on conference calls, and nobody wants that.
No, but you're 100% right, and we've seen it. I won't name the shippers, but go back and read FreightWaves, and you'll see those shippers that made those bets on too much in the spot market, and it shifts, and they end up being over the budget, and multiple people, as we like to say, got promoted to customer. They were shown the door, and that is where I think technology has caught up to, or is catching up, and being able to deliver more of that visibility to the data, and providing the capability for there to be, this working together element that, it's not like I know what's going on with the data, but you don't. So I'm gonna hold my cards this way. I know I've got this one, and I think that there's ubiquitous nature of the way that the data can be accessed through a variety of mechanisms like Farelanes and others. So that lets us play better together, and that ends up yielding what both sides end up wanting. A shipper is not going to get their stuff moved if there's not enough carriers around to be able to do it. Carriers want to have enough freight to be able to. There is a genuine willingness now, I see, to really try to work together. And for all of the talk that's been out there for all these years, I think technology has finally gotten to the point. There are providers like an Emerge that are providing the opportunity for that vision for both sides to actually succeed together.
Right. Yeah. I mean,
go ahead, Casey.
It's easy to forget, right? When you're in the trucking or in the logistics space, that right, it's the shipper, right? It's the customer that is always right, if you will. So we can figure out a way to eliminate some of that cyclicality of the market. I know there were a lot of shippers, right, in probably 2021 paying 7 digits, right, for transportation and logistics. A lot of logistics and supply chain managers getting bumped out of the market. But no, I think to kind of get back to that first point we talked about with, I don't know, call it the FreightWaves Mafia, if you will, PayPal Mafia. But seems like there are a lot of cool companies kind of in like a freight tech 2.0 revolution, where a lot of folks learned things from, the initial influx of VC capital and, companies going public through SPAC. Learned a lot of hard lessons. And it seems like there's some cool companies coming into this space that are, enabling truckers, right, to, be truckers, right, and shippers to kind of have a better idea where the market's going, so that they can, eliminate some of that unpredictability of transportation and logistics as a cost of their goods. So I don't know, what are the coolest companies usually coming up these days that you think are kind of enabling this world where maybe things can be more symbiotic?
Well, I'm going to be a little bit close to home again, but you can't argue with success. And you brought up it boils down to, what is the cost? The shipper's going to end up having to pay for this eventually. If something goes wrong with the carrier, if something, they don't show up, my routing guide starts to fall apart. There's issues within transit. There's issues at if there's delays, if there's, fines and fees, all of that. To me, and I'm lucky enough to be sitting on the board with at Jordan Grass Highway, and Highway identified that there were answers that others hadn't found around fraud. And to your point about it, comes down to the cost. One only needs to read FreightWaves every so often to see what nuclear verdicts do to trucking companies, what, those kinds of, even if it doesn't make it to freightways, what amount of cost and expense that fraud ends up costing, and highway, and what that team, what Jordan's team has put together from a growth standpoint is remarkable. And is it Freight Tech 2.0? Probably. Jordan was leading a different freight tech type of company, moved into this, built this, and is across the board for all of the intermediaries that are their customers, they are reducing the overall cost that it is going to cost those folks to make the trucks work for them as the broker, as the intermediary. And that, it seems simple, but it wasn't, to find the right data set to start with. And one of the people on the phone here and in our stream is involved in that. But then to take that data and be able to then go to what they're doing with it at a time when fraud was probably the most searched term in transportation for the last year and a half or 2 years. Highway, I think, is doing some really remarkable things. And again, their chairman, Steve Hausman, describes their growth. And I think he has the ability to speak from a position of knowledge on this, that their growth is faster than any technology company in the transportation industry serving intermediaries. And there's a lot of companies that have done that. Than has ever been seen, and kudos to those guys. That I'm close to them. I see them. I see a lot of what they're doing, and it's remarkable what they're doing. Some of the companies. It's fascinating to me. If you come into different conferences, whether it's TIA or you get Freightways coming up and all, I think it's fascinating to see who is this next generation, right? Some of the companies that were advertising and having booths and the like are in some cases gone, some cases thriving, but there's a new generation that is coming in and is buying the space and is promoting the content. I think it was very telling in the most recent the Freight Tech 25 that Freightways did at the Future Freight, and how much turnover there was in that top 5, I think really spoke to the where are the new value propositions coming from.
And speaking of the Freight Tech Top 25, I'll throw this up on the screen again. Here's Bill Hill, made the Freight Tech Top 25 over at FetchGoat. Part of that, when I have like 1,000 questions on VC and what's VC's doing right now in freight tech. Are there any other specific like niches or areas that are very popular? Number one. Number two is business model wise, right? How's it changed since the boom days of growth at all costs and here's some money, go find a business use case and we'll talk about it later. How has the investing changed since then?
It's a great question. And as an LP at Venture 53 and at New Road, it's fascinating to watch, and that's venture capital, not private equity, where there's more. There may be a traditionally more conservative like approach, and you'll see the rapidness that someone like a Venture 53 is willing to go into 20 plus investments, where others like New Road are and have been so successful. So to me today, Kevin, you're exactly right. Blitz scaling can exist when the problem needs to be solved. And again, I go back to highway, but they're not doing it by saying, all right, I'm going to go hire 50 salespeople and I'm just going to go crazy. No, there's a problem out there and I'm going to leverage relationships, leverage technology and all
Mhm.
to get my message out. There's not an intermediary in North America that doesn't know that highways out there. And think about it, 18 or so months ago, they had less than $1 million worth of annual recurring revenue.
Mhm.
And they're blowing past double digits, constantly. And that I think speaks to blitz scaling can still exist, but it's different now. It's not, to your point, here's a check, go hire 50 and throw as much as you can against the wall and let's see what sticks. It's now
scaling is
yeah,
not solving one problem. It's like, oh, we're gonna solve 5 different problems
Exactly.
and work them all at the same time and see which one works, almost, right?
Exactly right. And the path to level-headedness or positive EBIT or profitability, saying the profitability word, those things are, but with that being said, there are investments out there, and it wouldn't be a freight tech 2.0, whatever we want to call this pod, without somebody saying AI. And to me, lucky enough to sit on a couple of boards, have visibility through other, through some portfolios. To me, there's sort of the real AI and the people who are claiming, AI that you want, when you have a board meeting, it's almost like, hey, we've got operations covered, we've got sales covered, we've got marketing covered, we've got the financial stuff. Did anybody put the AI slide in? Well, if you're having to figure out how to put the AI slide in, then maybe that may or may not be exactly what but on the other hand, there are, and seeing a number of companies take advantage of what AI can bring to them. I think you're going to have to cut through the noise. There's not going to be a decent marketeer out there who's not going to try to shove AI into almost every press release that you see on freight tech. But I don't want that to arbitrarily, appear as if it's saying that AI isn't going to have the kind of massive impact that it's going to have, because I do think it's going to have massive impact.
Yeah. What do you think about blockchain, George? You think there's any chance of Web3 coming back around?
I think about blockchain back to when the blockchain and transport alliance in BITA was around. And if we were really smart, though, we would have probably gone and gotten, some of that Bitcoin when it, went down to about 2,000 or so bucks in 2018 or so. Yeah, we'd be probably playing golf at Pebble or Pine Valley if we were able to make that happen.
Oh, craziness.
Although there are places where blockchain is going to happen. With that being said, I think you can even see it on Wall Street. If you don't have an AI message, you're kind of getting hammered by the street a little bit. Well, if you don't have an AI message, it's either you're not very good at messaging, or you just don't have something that AI is going to help you out, or you gotta figure it out. There's way smarter people than I am, though, but just seeing, and again, I'll take it into my current stuff, what Emerge is doing in some of the AI that they're using with regards to predictiveness and suggestions and bringing out, which serves both sides again of the equation. It's making the shipper and the carrier, or the intermediary, the supply and the demand, work together better, is remarkable. And if you had said, gosh, my first visibility to Emerge would have been 3.5 years ago, if you had said AI would be somehow critical to it, I would have said, I believe you, but I don't know how. But it absolutely will be something that helps to differentiate that and continue to differentiate. So AI is 100% here to stay. And how do you guys know that this is actually even me, and that I'm not just artificial intelligence acting like, some airhead that's been doing this for 3 decades?
Very true. Very true. It does really remind me of blockchain, right? And like in 2018, 2019 at
Yep.
FreightWaves events, talking to people who'd raised copious amounts of money and they're
Absolutely.
out looking for a use case in transportation. You see the same type of thing with AI. I know Seth was talking last week, is the mentions on conference calls, right? 2 years ago, it was all about supply chain disruptions, right?
Yep.
You
Yep.
couldn't get out of a conference call without that, or earnings call. Now it's AI. I mean, just if you're a public company, you don't have a section in your earnings call
Absolutely
about
right.
AI, you're going to get hit.
Well, and that, I think, in the 3-card Monty that, are many of those quarterly earnings calls.
Mm-hmm.
Okay, now I got to plan for the next one. If I brought up AI in the last, I have approximately 90 days to actually be able to answer the question when the analyst says, in the last call, you talked about your AI initiative. Can you describe to us what progress you've made, when you'll start seeing benefit from that, et cetera? And so you're really going to, but I think you're right. The true benefit of blockchain actually impacted a number of companies, and a number of them spent the venture capital money and either pivoted or went away. And I think AI, to your point, you have to have it as a slide. You have to have it as a talking point. But in the not too distant future, you're going to need it to be an actual impactor to the business.
And where that impactor is, that's the big key, right? Is where that is, because we all hear AI, but specific use cases are few and far between it.
Right.
It seems like that I can implement tomorrow.
When you walk onto the floor of, and there's so many well-run brokerages that we've been lucky enough to be around. Chattanooga, is Freight Alley. What Craig Fuller, termed it. It really does have the intersection of so many things here. We've got so many brokers here. Chicago. I love the debate that that Craig and the Silvers oftentimes have with regards to where's the hub of where logistics and all is. But if you just envision the classic brokerage floor and the buzz and the monitor, but so much of it is that person interacting, looking at data, maybe looking at Farelanes data, looking at data and acting upon it. It just strikes one to say, there's got to be a way that AI helps. There's got to be ways. And I think that the really smart ones, and there are so many of them, are going to, take advantage of that. That is where smarter people than I are going to be able to take advantage of that. But boy, there's just so many places where data became so critical to be a cost of doing business. You have to have the most up to date. You've got to have the best data, or you can't play. And I think AI is going to be the same.
Right, exactly. And that kind of dovetails into the blockchain point. Is one of the biggest problems with blockchain was the problems with data interoperability. Right? Yeah. People have different definitions for the same thing, and you can't standardize data in a format that allows it to kind of flow freely and get those insights. I think there are some cool AI companies out there right now which can kind of provide the inference that you need to start to standardize that data in a way where it can be more interoperable, hypothetically, in a blockchain, right? One of the cool companies right now that I'm seeing in AI that have a little bit of involvement with is Duke AI, which is doing some cool things to be able to use inference through its slim model to pull data from load documents in a fashion that could be interoperable and allow folks to have a better idea where things are, so that they can be more predictive of where things are going in the future. there's a lot of them popping up. But one of the conversations
Absolutely.
that I continued to hear at TIA is the question of whether or not the technology is fake, and are there applications for the industry? I think that I don't know. A lot of folks got burned by vaporware, if you will. Maybe some of those
Yep.
blockchain companies that raised money and weren't able to find a solution with it. So I guess that's probably part of the hurdle, right? You invested in some technology. Maybe it didn't do what they told you it was going to do. So I guess that's part of the hurdle as well for some of these up and coming tech companies is to really prove, right, that you're solving a pain point for these folks with the technology.
No, it's really well said. But I will say this, and again, I'm lucky enough to be a small player in that venture capital world, get to see a few things. The good news for the companies that do have the right answer, Casey, and are capable of finding and utilizing AI to deliver value, to make things more efficient, whatever it is, there's money out there. There is dry powder available, right?
Yeah.
There was a time frame, when the freight recession hit, and you kind of there was, I don't want to say almost free money, but a lot of money had been flowing in. A lot of money was being thrown at companies, as we were saying. And that definitely, you could hear the brakes of the 53-footer, hitting pretty hard to slow this down. But there's still dry powder out there for good companies. There is. If you've got a good answer, you have, a thoughtful, dynamic founder that has figured out it isn't simply if you build it, they will come, that they are solving a specific problem. And again, I'll go back to highway. I think what Jordan Graft and his team and what Caney and the commercial folks are doing is sexy. I know Kevin Hill does. He's been going after this kind of stuff forever. I think that's sexy, but you're probably not going to, be able to do two sets a night, at the Carlisle talking about freight fraud and talking about carrier identity. But it solves a significant problem.
Right.
And that's why they're succeeding. That's why their options are significant on how they want to manage their growth and manage their opportunity and capital and all that kind of stuff, because they've solved the problem. And that's where, it doesn't, again, is the reduction of, if not hopefully the elimination of carrier fraud and carrier identity being sexy. It is to me, may not be to the world, but boy, it sure as heck is to investors. And
it's sexy right now.
It's
not a sexiest time in the history of transportation to go after fraud than right now.
Exactly.
Which is nice. I think I always come back to this thing right here. And C.H. Robinson came out and said that they're using AI for this. How many quotes in a freight brokerage do you get a day that not really worth a human's time to bid on because the win rate is so low? Now, if you could just automatically bid all of those requests without spending any human time or wasted energy on it, and you just win a fraction of that can really that can kind of change your business. And I think that's
absolutely
one of the easiest use cases for AI.
Absolutely. So that's a great point. I will say, going back to Emerge a little bit, we're doing a fair amount of that at Emerge. So it's speaking of sexy, there's nothing sexier than just the aroma of Michael Vincent or the artist formerly known as the Dude being in the vicinity. Yes. But that I think that is really, really well said. And there's I love the entrepreneurs that go to find or are passionate about finding the problem and then solving it. But to your point with regards to win rates, I've gone back, and when we were at Transplace, we always talked about trucker math. And we needed to have X percentage of margin, and everybody was familiar with I need to make 14% or 18% or whatever.
Yep.
you know, but we always thought about it that, all right, if we're making 14% and I'm doing, 9 loads a day at 1,000 miles a whack, that's a successful resource in a brokerage. Well, hang on, to your point, Kevin, if I can make that human being, because I'm doing something with automation, and I can have that, 9 loads a day go to 15 or 20, the trucker math just gets so great on the ability to say, I can take that 14%, I can take it to 12.
Yeah.
And but now they're processing 2.5 or 3 times as many, and there's tons of freight available out there to be able to do that.
Yeah.
Absolutely.
It's just as a broker, you don't want to deal with it because the win rate's so low. I mean, and it's so expensive to bid on that. If you can take that bidding cost down, it just opens up the door.
Everybody, and it seems as if people have tried to answer that question by delivering the better load board, right?
Yes.
Not picking on DAT because they're the one, but I'll solve it by being a better load board. Well, wait a minute. It's not the load board's fault, that it really is the mechanism by which I can bid on it and do it more efficiently and do it. And if my win rate is 3%, I don't care because I don't have a room full of people doing that. I've got a lot of that happening in a mechanized fashion. That's wonderful. And again, that's a lot of what the folks at Emerge are being successful at and making that happen.
And Michael Vincent threw out Q'd, which is a very interesting. Tom Curry, or a friend.
Prasad, right?
Prasad is now CEO over there, and they're trying to solve that very specific scheduling problem. That if you've ever been in scheduling hell, that you get to pick up here and deliver there, and it's very certain restricted time windows, and it's hard to get appointments, and it is something that no one likes to do.
But where they're going makes total sense at Q, because anyone that's been around a TMS or anyone that's been around a managed trans company like a Transplace, the artist formerly known as Transplace, now Uber Freight, that trying to tie that together and make your carrier happy. How do you win, the award from a carrier of being their shipper? Making them efficient, right? When you tell me to make a 7 a.m. pickup, I want the freight to be ready at 7 a.m. I want it to be easy, et cetera, et cetera. When you tell me I have to deliver, make it easy, et cetera. All of that stuff. But and everyone's been attacking that scheduling problem. Every TMS has a scheduling application. They all do. All managed trans companies have some mechanism, and you've seen many of them coming together to try to put some sort of standardization consortium to put that all together. If that works and you take more inefficiency, again, what you're trying to take inefficiencies out of the market, it's a massive play. Which as we started talking about, when is the supply and demand going to shift? If somehow tomorrow you could snap your fingers and take 5% of the inefficiencies on either the pickup or the delivery out, or make both of those happen, you suddenly pick up a shit ton of available capacity because they're not sitting and waiting, they're not, et cetera, et cetera. And so as that occurs, some of the capacity, will have more miles capable of being, being driven. Craig Fuller drilled it into my head that it's really about, the efficiency and having enough miles at the right rate. I can get a massive rate, but if I'm sitting there and the truck's not running, you can't make any money when you get trucks up against the fence. And if you figure out that scheduling play, it's going to be a huge impact to capacity,
which drives efficiency and one of the biggest headaches out there for everybody, which is detention and dwell times, right? You minimize that, makes everybody happier.
And it's one of those, like, is that gonna set fireworks off in Wall Street from a sex appeal standpoint? Oh, you're getting rid of detention. Okay, great. No, take this all the way out. If this works, I'm going to end up with more capacity and the willingness as you solve challenges around, we our friends at FreightWaves and the shipper of the year and the like.
Mm-hmm.
If a shipper that becomes more carrier friendly, all the things, all that lip service that's been played, but I really have an impact on it, I'm going to have access to more capacity. I'm going to have access to, overall lowering of rates and improving of service, all of those things. It may not seem sexy, but my goodness, the impact that it has on the supply chain are massive.
Yeah, the most profitable businesses are the most unsexy businesses, right? It's what no one else wants to do. So there's less competition and everything, which is good.
That's exactly right. When I right outside of our home here in Tennessee, they're paving the road. This neighborhood hasn't had the roads paved in a long time. There's not anything less sexy than watching roads get paved, but then you see the size of pieces of equipment that these folks are using, and you realize this is a profitable business. They are, now the good news is they're taking care of infrastructure and making everybody's property more valuable, all that kind of stuff. But, laying tar, not very sexy, but my goodness, it's got to be a moneymaker for the size of I just think of the engineering behind those things and how much those pieces of equipment cost. So anyway, yeah, the sexy may not make everybody excited, but boy, makes me as an investor excited when somebody finds a problem and figures out a way to solve it.
And that's the key. That's the key to all the startups out there.
Yep.
Is to find a problem, solve it. Don't think it's not that complicated.
Yep. Exactly.
In the business model way. Casey, we're talking. Sorry.
No, I was just going to say, yeah, I mean, I don't know if people thought that Brad Jacobs companies were sexy initially, right? From their offering, right? But they did what they did, and they did it well. And
you mean trash and rental companies and LTL don't sound sexy? You're 100% right. And the man has, he's, having been around a number of the remarkable people in our industry, being around Brad is special. There's a specialness to what he's figured out, and the road is littered in our industry, in transportation and logistics, is littered with people who poo-pooed his strategy or strategies as he was rolling things up into XPO and then unbundling them. The road is littered with people who questioned or wondered, cultures won't fit and all that. Well, all I can say is they were wrong.
It's true.
Very wrong. I want to bring up this because I think we're talking about the market turning. It's going to turn at some point. I've had a lot of conversations with people with freight brokerages, right, and leaders at freight brokerages over the last year. One of the more I was surprised, especially like 6 months ago, surprised at this is when the market. Everyone's kind of concerned when the market turns, because specifically in their carrier sales departments, right, they don't have anyone in there. 3 or 4 leaders have told me this. They don't have anyone in there who's seen a tight market, which surprises me. It shouldn't surprise me, but it does. It took me aback a little bit. It's like, didn't we just go through like the mother of all tight markets 2 years ago? Complete turnover, right? So when the market turns, we're going to see some of the same issues of inexperience, of not just being able to post and cover anything you want to. Actually going out there and attacking the market, which I think is another great use case for AI.
Absolutely.
Talk about unstructured data out there, where trucks are, where they want to go, what their network looks like is the is a quintessential unstructured data for freight brokerages, and being able to map that and automate that in some way would be a game changer.
Absolutely. Say again.
So Gen Logs. I don't know if you're familiar with Ryan Joyce and those guys over there, but I think that product is coming to market here this summer. And don't know, maybe that's a tool that these carrier reps could use to figure out, what MCs are running in what lanes and how to cover stuff in a tight market.
Yeah, I think you're exactly right, Kevin. And with there's our friend, the Silver Fox, Ryan, here in Chattanooga, and what he's doing, may be a subset of the totality of the entire market, but it's a pretty significant subset. And that, I think you're right, that sort of leapfrogs to, can you take that and turn that into the visibility to where are trucks? And again, if you just nip away, we talked about it when we were talking about detention and the like. If you just nick away little bit by little bit, that will increase the efficiencies and productivities of trucks, which all ends up yielding benefit. I think the point is very well taken with regards to people haven't seen, or folks that are at brokerages or intermediaries haven't seen the tight market, because you've seen so much turnover. I think that's really true, and I think that is I think it's part of the reason, and not the only reason, but it's one of those reasons that an intelligent shipper realizes this market is going to change. I mean, it's been great. It's been a shipper-friendly market for a couple of years now. The freight recession probably treated their transportation budget very well. But at some point, it's going to go back. Kirk Thompson, former chairman and CEO, one of my great friends at JB Hunt, decades ago, told me, at some point this is going to turn into a carrier-friendly market. And Kirk knew that more often than not, the capacity in the supply and demand side wasn't always in the favor of carriers, but it's going to turn at some point. And I think shippers are realizing that, and we see it in bidding strategies at Emerge that, early on during COVID, there were certainly some, folks that had been doing annual bids that moved to more frequent bids that would take advantage, maybe take advantage of the market, maybe not pull things off the spot market, but we have seen a lot more folks looking to secure high quality capacity, whether that capacity be pure assets that they've already used, or assets that an Emerge is bringing to them through the programs that Emerge has. And again, the proof's in the pudding. That's why Emerge's numbers are up so much. And if that is, to me, demonstrating folks are thinking about, I'm not going to get caught. I'm a shipper. I'm not going to get caught with my Atlanta distribution center suddenly having to pay spot rates that are going to go from $210 to $350 in the matter of a couple of months. I'm not going to get caught with 30% of my freight going that direction. And again, predictability is what it's all about. The routing guide falling apart is short-term good news for spot capacity, but it's not good news for the market. The market does better when there's predictability for the asset providers, predictability for the intermediaries, and the shippers will be meeting their budgets. And that I think is why you're seeing more and more of the freight heading to contract, or even further. If I can get the dedicated, and I can get the private fleet or the utilization of those kinds of providers, I get better service on that. My predictability of all things is improved. I think that's why you're seeing a lot moving in that direction.
It's a good thing to hear.
Wow. Kind of on the dedicated, you have more control, but less liability in a lot of ways, right? Because you don't want your own private fleet, but it's more of an outsourced play.
Exactly. And there's so many different flavors of that, and the managed trans side, the true dedicated provision. Folks have really gotten that model right now, and you can really take advantage of that as a shipper. And to me, I'm a simple person talking about contract and spot. It's pretty easy, right? The spot has volatility, contract more predictable, etc. There's a whole lot more nuance to it than that. There's a lot of stuff that is just rock solid, built to be contract freight. There's stuff that is going to be, hard to really force feed its way into contracts, so that tends to be spot. But on that really predictable contract stuff, that's when you get to dedicated, or do I even want to go all the way to private? That then is incredibly predictable. Up at the other end, spot's gonna be hard. But then in the middle there's some of that, and what I see as some of the most difficult is that low volume contract freight, right? If you're running a bid, well, I may as well throw everything in there. Well, the things that should be very much contract, dedicated, private, the very predictable, high volume lanes, that clearly is what you should be trying to put under contract for whatever the time frame you want to be. The other end of the spectrum, the spot stuff, the unpredictable, going to be really hard. Don't even bother. But there's that low volume that you have tended to put into contract that makes it really hard for the capacity to deal with, right? Okay, it's, one load a month and it's going from here to here. But in order for me to win the high volume, I need to take this low volume. Well, you know what? There needs to be a better answer. And I think there are better answers on that low volume, where if you can put it into a marketplace type where you're seeing capacity that isn't simply spot market type stuff. And, these aren't fake loads. They're real loads, not fake postings. They're real loads. They're just that low volume contract, or historically have put into contract, that fall between real contract, high volume, and true spot. And that's where your routing guide falls apart. Typically, that's where the problems start cropping up. That's where capacity tries to go chase after higher dollars. And I think having a capacity provision, again, speaking like a merge, doing that's a much better answer for that low volume contract rate. It's a much better answer than letting your routing guide fall apart and let that stuff go to the spot market.
Though there's always the problem lanes, right? Low volume, low mileage sometimes, or that tweener type of lanes that aren't in major markets, but they are predictable, right? You're sending one load a month to wherever, right? It's just hard to cover. That is the problem lanes,
right? And I make, I have, just to kind of carrier, I force CRST to take that because they want this good stuff. They want this higher volume stuff. Well, let them have the good stuff that they can service and they can do well. And there's other ways of covering it than just simply, going to the spot market. Have there be a, essentially your own pool of carriers that would be available to do that. That you don't have to throw it out there. And there are technologies out there that are making that possible. But that problematic freight, people have talked about it for a long time. I think there's some solutions now that are much more capable of making that happen. And AI will make that nothing but more easily to be able to get more velocity on what kind of capacity you could put against that freight.
Exactly right. That is exactly right. I don't know. Where do you want to go from here? What should we do?
I don't know. It's a good question. If there's anybody in the audience that needs a little help quoting a lane, happy to do that. But
I'm just disappointed that I haven't met Casey's cat, but that's fine. I always thought that was the highlight of the pod.
I know Steve the cat. He should be around here somewhere. He was just there.
There you go.
There he is. He's tired.
Amazing.
But,
When the cat is the size of one of the podcasters, that's pretty amazing.
he's a big cat for sure. But hey, Steve, meet George. George,
Pleasure.
in the industry, my first boss in space. So that's why you got to hear me talking about logistics all day long.
I appreciate that. I do have to say, and I appreciate you guys, giving me the opportunity to wax poetic on so much of this. The thing that has really, one of the major things I think that has changed over the past decades, and why you're seeing so much money, you see, equity flowing into logistics and transportation companies. Back in the day, I don't know how far you have to go back to say back in the day, but back in the day, the transportation folks used to call themselves, whether they were shippers or carriers, they were, mushrooms, right? They were kept in the dark and they had shit piled on them constantly. It became readily apparent. It didn't take COVID, but over the last decade or so, it became very apparent that there was fragility in the supply chain. There were places where we had weaknesses, and we really needed to put smarter, more enabled, given the tools, given the resources necessary. And that's why you see so many folks coming out of colleges and universities now, not only with great supply chain and transportation logistics degrees, but out of business schools coming into our industry. And I think that's, I don't want to pick on us and all, but for so many years we talked about, fixing detention or making there be more productivity on the brokerage floor, and or fixing fraud, or whatever it was. But now you're bringing into the industry so much brain power, and people who have been inspired since maybe before college, into college, after college, to say, I'm going to fix the problem. I'm going to be part of this solution. And that's a genuine change. And I think that's part of, we talk about these, networks of relationships that, the freight waves folks that will be embeds in so many of these other companies. I think about, and I'm a little prejudiced, Maureen and I lived in Northwest Arkansas for a couple of years, and with my transplace time, spent a lot of time up there. What the University of Arkansas is providing out into the industry, and there's a million others, University of Tennessee, you can go down the list of all of these great schools. When we were in North Texas, not that far from where you are, Kevin, where they had the storms recently up there, the Mean Green in North Texas up there are an amazing program. But when I think of what Matt Waller did over at University of Arkansas, that group of people who have graduated with undergraduate and graduate degrees and are just going out into the world. Now, sure, a lot of them end up in the Northwest Arkansas ecosphere and go to Walmart or go to Hunt or but those folks eventually then move out and go elsewhere, or even in Northwest Arkansas, there's so many companies, so many CPG companies that are based in Northwest Arkansas. They're not just doing CPG transportation work for Walmart, but it's like, well, hey, 30% of our freight goes into Walmart. Let's just manage it all out of there. Those companies are all being managed by, these supply chain, folks that have come out of the U of A in many cases. And that I think you're going to see. I've been lucky enough to be influenced by, people I've worked with, whether it was Yossi Sheffi and Chris Kaplis were doing out of MIT, and the genius of what their math and their algorithms were able to do. But I think you're going to see the continuation of the companies that are solving those problems, because somebody was sitting in their transportation 201 sophomore year when they were learning about the difference between LTL, TL, refrigerated, flatbed, the difference between a fifth wheel and a spare tire. And they got inspired to go, geez, why is that such a problem? And they've been thinking about it, and they've been mulling on it, and they come out and they, spend some time working wherever they work. They go to a Freightways, they go to a Coyote, they go to an Arrive, they go to Molo, they go wherever they go, and they, figure out that problem that I thought existed does exist, and I'm going to go fix it. And they now have access to the technologies, the money, and they can go fix stuff. They really can.
Amen.
I think another trend too is, and I really thought about it 2 years ago. I don't know if it's, hopefully it does continue, right? You go through the C-suites of the CPG companies, of corporates, and you go through this evolution back, I guess, in the 70s and 80s. Maybe it was controlled by marketing people. And then over the last 20 years or so, 30 years, it's kind of been dominated by financial people, right? I think we're back into operations, supply chain type of arena, to where the next generation, over the next decade or so, will be dominated by people who are really deep into operations, supply chain efficiencies. And it's just kind of like rolling evolution that and cycle really that goes through, right now. You can make your margins on being very efficient operationally, which includes the supply chain. And that's the most important thing, especially after all the supply chain disruptions during the pandemic, right? That's become the new niche. Technology focused too. Maybe AI usurps that. Who knows?
Right.
But I think you're kind of pivoting away from really financial engineering.
Yep.
To efficiencies and operations.
Yeah, I think it's really a good point. The other thing that as you sort of evolve the way that the supply chainers, as opposed to the finance folks, may be managing or operating, the money flow that is available, there's not that you won't invest in someone of a certain age or the like. I don't want to get into ageism or anything, but generationally, the investments that are going in and being successful in making some of these entrepreneurs at a relatively young ages, sort of, I think people are realizing they are this next generation of where the money is, right? There's generational wealth in this industry. And, one only needs to look at asset, non-asset names, whether they be in Green Bay, Wisconsin, or Lowell, Arkansas, or, Richmond, Virginia, or Los Angeles, California. There's generational wealth that's come from this industry that has been reinvested back in a number of different ways. Now, those generations, it's now this generation in those places that are making some of those investments. And that's then fostering folks that are, coming out of Tennessee or UT, UNT, or Arkansas, that build companies, do something great, and make some money, and are now looking for what's the next great challenge. And they're not interested in the next great challenge in, they want to, they want to fix baseball. No, they want to continue to fix the supply chain. They want to continue to fix transportation logistics, because that's what they grew up on. That's what they were trained in. And I think that's a really going to be a significant impactor as you think about, not only where is the money going to go in the next generation, but where's the money going to come from in this next generation, starting now over the next 10 years.
And that's a really interesting point too, because you have Venture 53, right? Who is a venture fund made up of insiders in the industry, which I think is a game changer, right? Because 5, 6, 7 years ago, everything is being raised in San Francisco. From Sand Road. Is it Sand Road? All the VC funds who were pouring money into something they really didn't understand all that well. and you can kind of see that from the economics and how they paid people,
Absolutely right.
and it didn't make any sense whatsoever. So you had a lot of noise. But having Venture 53, having insiders investing because they know what problems need to be fixed, and kind of have made some really great investments.
Well, and the BS factor is set to 11 going in. When you're trying to pitch a Venture 53, and the level of logistics, transportation, supply chain knowledge that not only the folks that are running the fund but their LPs have, you're literally calling, well, hey, we just got pitched this thing that is going to be the best new thing for asset providers or whatever. What do you think? Would you use it? Would you support? You're right. The baloney factor, or let's just throw it up against the wall and see if it's going to stick, is nowhere to be seen. And that is, I think it's a massive game changer, and it also feeds on itself, right? There's a well, if these really smart people are involved in this, I, as an entrepreneur, I want to work with them, right? Now, everybody's money is green, etc. But this
capital,
you always hear, you're going to have guidance and input and advisors and strategies from whomever your investor is going to be. Yeah, but if my investment community is made up of the best and brightest, and I have access to them, I want to be a member of the cool kids club.
Yep.
Right. Yeah. And not too often have I ever been accused of being in the cool kids club. And but that's what you get when you have that kind of. And again, there's nothing wrong with other people's capital, but when you get that capital, it really comes with those kinds of advantages.
Yeah. The carrier and the shipper side, right? I mean, you got 100%. Dan Powell, Coca-Cola, and Estes, and guys like you in between. It's cool to see the smart money kind of coming together, and I think you're right. It's a cool point about the human capital and the next generation of kids coming up. My cousin Henry Edwards is actually staying here for a wedding in the first episode. He's at Norfolk Southern. So, he's one of the young kids on the metals team there. And, they had to get rid of a lot of the tenured employees. I guess Norfolk Southern's been in the news lately. So a little bit of a shakeup there, but, it's cool for him to have the opportunity to, take a little bit more of the reins, if you will, and see if there's a way that they can't, grow the business or help the supply chain be a little bit more efficient. Or you go back to Walmart, right? And what Dean Matt Waller has done over there. It's mind blowing. When I was in school, everybody was talking about, Walmart and brick and mortar being dead. And now I see, Walmart kind of competing with Amazon to a certain extent, making package deliveries with drones on people's front lawns. So, it's cool to see the kids in school starting to pay attention to the problem, and then having the smart money coming into the space to invest in some cool companies solving problems.
Yeah, when we were running Transplaced, Tom Sanderson and I were always trying to find the best and brightest to bring into the organization. We were lucky to build relationships with them, and we had our backyard. We had the University of Arkansas, like you were saying, and Matt Waller, and with North Texas and the Mean Green. People that aren't in the industry don't realize just how great the programs are at UNT. But even that 10, 15 years ago, these programs were getting cooler. They were, gaining support. They were growing. What Waller did at the University of Arkansas as dean of that program is amazing. But fast forward to today, those are the places where the really cool kids and the smart kids are going. Some of these folks who lived through the pandemic and had to listen to, I'm sure you guys felt the same way. How many times were we going to hear broadcasters or anchors talking about, supply chain disruptions, supply chain issues, when if you ask them in a simple 1 or 2 sentences, describe what a supply chain is, and they would not have been able to tell you.
Mm-hmm.
But they knew that it was disrupted. They knew something was going on, right? The key bridge falls down and a tragic event, and okay, supply chains are disrupted. What's really going to occur if the port of Baltimore can't be serviced for 2 months, 3 months, or 4 months? And but those are the kinds of challenges that the cool kids are going to school for now and want to come out and try to help solve. That is, generationally, that's not what was occurring when I was, going through school. And like I said, 10 or 15 years ago, when we were recruiting from those schools, we were getting unbelievable resources. Hell, some of them are running those companies now. But today, those are the, the departments, those are the schools, again, to your point about Dean Waller, the growth of what he did at the University of Arkansas is extraordinary. And you can put, like I said, Tennessee, you can go around the country and look at Denver, just so many incredible programs that are putting generationally the next leaders out there in way larger numbers than were ever done in the past.
Final frontier.
It is.
Absolutely.
It is a new frontier out there. It really is. Well, I think this is we're going to wrap it here.
It's good to see you boys. It really is. If Casey's cat is a recurring character, if you're willing to hear my not so dulcet tones, happy to participate with you guys. I love what you're both doing, and love seeing both of you. And given that I have the opportunity to work with Casey's dad a little bit more now, that's always a good thing. And the Apple, I think for the last 25 years or so, I've said that John Larkin's one of the 2 or 3 smartest people that I've known in anything, not just this industry. And the apple didn't fall very far from the tree with baby Larkin. So anything I can do with you guys, I'd be more than happy to help out.
Thank you, G. Really appreciate it. Love to have you back.
Yeah.
Did you catch that grand slam the Orioles hit on the Sox last night?
I'm wearing my Red Sox vest just to be able to talk about a 500 ball club is not always a bad thing when you go in with such low expectations. And given that I'm knocking on wood when I say this, given that the Celtics are about to march towards another banner to be raised at the TD Bank North Boston Garden, and this will be, since my son Matthew was born, something like the 17th or 18th championship between the Patriots and the Red Sox and the Bruins and the Celtics. We're although with that being said, it's entirely possible that joining the Rangers, the Stars could win, the Mavs could win, and I think you have to go way back into the 1900s for when any city held 3 major sports trophies. So Dallas is in a really good spot right now.
Amen to that. Sure. As long as the Cowboys aren't good, I'm okay with it.
Having had the opportunity to spend some time with the Joneses and all that, I will not comment, but hoping that Drake May ends up turning out to be just another GOAT. We were lucky enough to have one. Who knows? Maybe we'll get another. And I'm sure that people who know me are just pleased that I didn't talk too much about the Tom Brady roast on Netflix, which was extraordinary.
I still have not seen it, but I want to. I need to sit down and actually watch it.
Watch the version that takes out some of the expletives and all that. It is remarkable. It's remarkably funny, but it's filthy. It really is. But hey, right. I've somewhere around here there's an 11-year-old dog who has a collar that says Brady on it, and he was named after the GOAT. So, and we didn't rename him when Tom decided to go chase another championship down in Tampa. We were loyal to the man, not just loyal to the laundry, as they say. We were happy to keep him named Brady.
Nice.
Good boy. And yeah, you may have found another dog in Drake Mack. Sounds like.
Who knows? Drake is not a bad dog name either, if you think about it.
No.
So it's possible. I don't even want to consider that our Brady at 11 is going to go anywhere. But we all know that Father Time calls on us. So who knows? Who knows? I'm not sure that any self-respecting dog placement service would actually let somebody of my advanced age have a puppy at this point. Who knows?
Don't underestimate yourself, G.
Yeah.
Do anything you
You
put
still
your
get
mind
dog.
to.
Yeah, just put a stealth 2-3 wood or 5 wood rather in the bag, Casey. So we're getting ready for the Barstool tournament up in Boston in August. So
Ooh, that'll be fun.
yeah, hope so. Hope we do a little bit better this year than we did last time.
Cool,
Sure
cool,
you
cool.
will.
Well, gents,
Good seeing you boys.
we'll sign off here live, and until next week.
Yeah.
Take care, boys.
Good to
You
see you,
bet.
G. You too.
Thanks, George.
See ya.
Bye.